where we can pop in and see what SATA's been trading like. The other big news, I guess, is like STRC is really getting tested from here. What are your thoughts on that, Yves? Do you think there's been a rotation from SATA? Is that why Stretch is still being tested? It's down today, a couple percent. It's down trading in the 93, $94 range. When do you expect that to rebound?
Yeah, I mean, I think the price action on Bitcoin obviously doesn't help right now. The price of STRC, we see it going down right now. SATA is actually holding up quite strong, even with the whole market going down. So that's quite nice to see. Obviously, as we already pointed out, the daily dividends contribute to that for SATA. STRC sees some weakness. I think there's various factors. We talked about it already last week. I think the USD reserve being depleted didn't help, because that's where we saw more or less the price go down. I think it went from basically par to 98 or even 97 the previous weeks. On top of that, you've got SATA going daily, so that's definitely taking some additional, basically taking some thunder away from STRC. And yeah, looks like sentiment in general is not so great on STRC lately. I don't know if we're probably gonna go get into it, but there's also a lot of infighting right now in the Bitcoin community, and there's like various factions. So it's probably also taking a toll because of that, right? So I think those are the three main factors that you need to take into consideration.
Yeah, so strategy did lead the week. They had an announcement that they hit the common ATM for a couple $100 million, ported half of that into Bitcoin, and started to replenish the USD reserve, like you touched on, Eve, there. So they're creeping up on about 8 months of dividend coverage. Do you think that's still playing into the price action, Chase, on STRC?
Yeah, I think it looks like maybe we'll get $2 closer to par for every 100 million of USD reserve that they add back. I mean, let's see if that's the trend and that continues. What I thought is kind of interesting here is in the conversation that Saylor had with Matt Cole in Prague that Mahler's kind of chimed in with his Q&A about. Saylor talked about how it's not inherently dilutive to raise the USD for the USD reserve. It's actually just expanding the capital structure. Now, it isn't accretive to Bitcoin per share, but it is not dilutive to common shareholders inherently, because if you have a $100 million company and you raise $1 million in cash, that cash is still exposure to the common equity. And so I think it's kind of an interesting game that's going on now, where we're having to all rethink this idea of dilution, and is raising, tapping the common equity ATM to raise the USD reserve dilutive? Well, it's dilutive in Bitcoin per share slightly over the near term, but to Saylor's point, it increases the creditworthiness of the company because it expands the capital structure, and it doesn't inherently dilute the enterprise value and the share value associated with that. So really interesting dynamics going on. And yeah, I would expect STRC to struggle to get back to par until we maybe hit, closer to 2 billion in USD reserve.
Yeah, so I think some of the problem around the dilution, like I don't even know if dilution's a good framework, but like you could kind of twist that, Chase, where it's like any time that a company raises capital in public markets, they could spin it, oh, this isn't dilutive, we're adding to our balance sheet. It's definitely different for an operating company versus a company that's very balance sheet focused like strategy. But you could say, hey, we raised $20 billion in capital markets, and or we're SpaceX, we raised $60 billion, or did an all stock transaction to purchase, Cursor, this company, and that's not dilutive because it's adding, to our core operating business, and will actually enrich shareholders long term. I think it's a bit of like a little bit of wordplay, and I think it's kind of strange that I think some of the critics are weighing in on dilution, and Saylor's combating that by saying it's not dilutive. I think I kind of disagree with him there, in that adding to the USD reserve isn't dilutive. I think when people think of dilution of a stock, it's like anytime there's share issuance and you're holding, less of that equity slice of the pie, that might be just like the framework that everybody's stumbling over. Obviously, when your unit of account is Bitcoin, talking in the Bitcoin per share metrics makes some sense to calculate dilution there. But Chris, I'd like your kind of take. What do you think about the dilution narrative? Is it useful for a company that is a balance sheet company, largely the way that strategy is? And do you think it's just like semantics that people are stumbling over?
I mean, we can go as deep as we want, kind of on the conversation, but on the surface level, uh, again, traditional finance is still wrapping their mind around what's going on. And I mean, how long has the ATM been open on the equity? It hasn't been very long. It's not like this has been like an 8-year idea that people have been able to digest, and so I mean, and again, we talk about the infighting. I mean, even Bitcoiners scoff at the idea. In fact, probably and there's a swath of people that are inside the Bitcoin space that really push against it more than traditional finance does. So, it, again, this is a whole seasoning thing. Not only does like STRC, the instrument, or the instruments themselves need seasoning, the entire complex needs seasoning. And so you're going to go through, these moments of infighting, and but in the end, you're either, and again, we always talk about there's different players in the game. Yeah, if you're the short-term player in the game, there's a lot of movements, like on a day-to-day to week-to-week basis. Saylor, in one of his talks more recently, is talking about, their disclosures that come out with 8Ks. Like they're very transparent, from week-to-week basis, not just on a quarterly basis. So that's great on the transparent side, but then you kind of have like, speculators actually love that too, because it kind of creates momentum in like different directions and things like that, that are trading the instruments, which is fine. Again, they're spreading all the games, and all the players are playing separate games. And then you have to identify which table you're sitting at, because if you're sitting at the wrong table and you don't know what you're doing, that's when you get in a lot of trouble. Like if you're trading options, and you have no idea what you're doing, that's when you get your face ripped off with some of this stuff. Because, and even Saylor talks about that. There's just there's a meta that goes on. There's a lot of game theory with these things that go on. But the bigger picture, they're just arbitraging long term. They're getting the apex capital, and they're just going to continue to do that, and pull the levers when they can.
Yeah, yeah, totally. Um, yeah, I guess there's a couple ways to go with that, and maybe Chase, I'll come to you on this, but where do you think I guess like Jack Mallers, when he was asking Saylor about him to clarify his position on MNAV, he says, I'm just asking questions. I caught a little bit of Jack's podcast yesterday as he kind of dug into his thinking around this thing. Do you think Jack is just like kind of manufacturing beef here, and is being kind of a lightning rod as he's asking these questions about a company that's custodying Bitcoin in a different way than his operating business is? Like, do you think this is really organic? Is like I certainly take Jack at his word. I'm a big fan of his too, but you know, um, he's kind of going into this thing. It seems like looking for a fight. How do you view, I guess, the questions he's asking in the larger discussion around MNAV and how strategy is kind of tapping the ATM as they're trading technically below their net asset value.
Yeah, Eve and I touched on this briefly on the one share pod that we did yesterday, but I also kind of want to take Jack at his word and give him the benefit of the doubt, because he's definitely to date been a great actor in the space. And at the end of the day, these are good questions. Like the discussion about MNAV versus CEBE is relatively new, and honestly a very worthwhile debate in its own right. And that's just two ways to kind of look at the Bitcoin per share accretion and enterprise value over time. And And so I think that, even Saylor himself and Strategy, they add new metrics to strategy.com periodically as they either discover them or get regulatory approval from their lawyers and the SEC to actually post them. So, like Chris said, like this whole complex is seasoning, and there's a whole host of new metrics as the world of fiat denominated unit of account and Bitcoin denominated corporate unit of account are kind of colliding, but hasn't quite left, the fiat world for the Bitcoin unit of account totally. And because it's a fiat arbitrage, the long-term arbitrage of the cost of capital in the fiat capital markets to acquire the long-term asset Bitcoin, those will continue to both be involved in the trade. There is no version of strategy, in my opinion, where it's purely Bitcoin unit of account, because the whole strategy is based on their ability to tap the fiat mines and the fiat capital markets. So we're like, this is everybody just trying to do their best to try to figure out what that metamorphosis from fiat corporate unit of account into Bitcoin future state unit of account looks like, and it's going to be messy. And I think for Mahler's, he's getting ready to run 21, and there's been a lot of just kind of sit and wait in his role, and I think he's trying to get out ahead and prepare himself for how he's going to speak to these metrics on a go-forward basis. And who better to learn from than Saylor, and who better to have the conversation with than the open source public, which he's obviously well known for trying to have that conversation out in the open. So yeah, I think it's a worthwhile conversation, and you shouldn't own Bitcoin or Bitcoin treasuries till you've really examined all of the criticisms and concerns and done your own homework to build that conviction.
Yeah. Do you think there's too much attention paid to MNAV as a metric generally? And I guess what's your take on CEBE as a like more useful metric for this stuff?
I do think it's a more useful metric. I do think there's too much focus on MNAV, but I would almost say that there's too much focus on any kind of valuation. Like, to me, the strategy trade is super simple. Look at their cost of capital, and do you believe that Bitcoin will outperform that cost of capital? And if so, the gap appreciates to the common equity. And then the nuance becomes like, okay, what's their true cost of capital? Because yeah, STRC right now is paying an effective 12.25 rate, and it's variable, and it's the stated 11.5% STRC yield when it's trading at par. But in reality, if they're issuing the ATM at a premium to pay down the STRC dividend obligations, then it's not a true cost of capital of 11.5%. It's actually less. So, and the more the premium expands and the more Bitcoin goes up, the greater their gap between the cost of capital and the compound annual growth rate of Bitcoin, and therefore the greater the appreciation to the common equity. So you really don't have to like get into the daily metrics the way that these people do. To me, it's like, what's the cost of capital roughly? What's your Bitcoin compound annual growth rate forward-looking projection roughly? Is there a wiggle room there that you're comfortable with? And are you comfortable with strategy executing on that and custodying the Bitcoin on behalf of your shares? If you are, then be a holder. And if you're not, take self-custody of spot.
Yeah, I think that's that's the question just every potential investor has to face. And I almost think like Yves, I'll get your take on this, that like we're just like so hyper focused on this in the community and the larger Bitcoin community that might be bearish on strategy, and the treasury model are just like way too focused on like these simplistic metrics. And yeah, I still am kind of like baffled at where the the criticism even comes from on this from Bitcoiners. Is it as simple as maybe I'm a Bitcoin purist or someone who's been around for 3-4 cycles, and I hate fiat so much that anyone tapping fiat capital markets is doing something wrong? Is it like PTSD from other types of trades in the ecosystem blowing up? Where do you think this all stems from, Yves?
Yeah, I don't think it's as simple as looking at it from one angle, right? As you mentioned, there's potential PTSD from the last cycle with FTX and BlockFi and all of those companies that blew up because of the over leverage and what they were doing, the shenanigans with the shitcoins at the end of the day, right? Because that's the real reason why they blew up. They were actually trying to play the game with in the altcoins, and that clearly went against them. So that's definitely one of the things, and it's not too long ago, right? It was 4 years ago, more or less. So that's quite recent, and I think that's on everybody's mind. The other thing as well is we've had a lot of OGs that have come, and there's a lot of them that also come mostly from more a tech background, right? So they don't probably understand all the what's going on in the capital markets, and how financial engineering potentially really works under the hood, and what goes on behind all in Wall Street and all of this, right? So I think if you it is also hard, even if you have a financial background, to understand everything, right? You really need to deep dive into all of the products. I studied finance, and I had to go back to see everything. Oh, what's a convertible bond, preferred equity, how does it work, and all of this, right? So I had to go back to all the basics, although I had my education, or part of my education, in this area. So it is not easy. And if you don't do your proper homework, as Chase mentioned, then yeah, it can be very tricky. And from an outside observer, it looks very, very like Ponzi-like, to be honest, if you don't really go deep into the weeds. So definitely there's this, but also I think there's also again this toxic maximalist, like almost religion or sect, like, that you want to stand firm for what Bitcoin is, and you still truly believe in self-custody and all of these things, and you maybe don't want to let go. I also kind of understand that standpoint, but again, you need to see it from a transition phase. I don't think tomorrow we'll have 8 billion people self-custodying. So all of these products kind of make sense for the normies in general. They need to be adapted for the world outside of the Bitcoin space. So we see a lot on X, but if you go out in the world, I think people will be glad to adopt an STRC or SATA, giving them 11.5 or 13% yield compared to the other products that there are outside, right? You need to compare this to the bonds and the credit instruments that are outside of the Bitcoin space. And I think that's what we don't do enough. And on X, we're in a bubble, really. Bitcoiners fighting Bitcoiners. I don't see anybody criticizing like the treasuries or anything like this right now. So that's crazy to me, as you point out, right?
Yeah. I think about, like, how did we get here, right? So this all started in the last kind of cycle during COVID, when Saylor, you know, took a deep dive. He saw his company was, I wouldn't say on life support or anything like that, but it was, struggling to take that next leg up. I don't know if you guys ever caught his interview with Jordan Peterson, but he kind of talked at length about how, he kept trying new things for basically 2 decades with strategy, and he built what I would call definitely a successful business that offered a lot of products. They had a lot of like Mag 7 type companies, tech companies as their um, clients, and they built a really respectable business. It wasn't in danger of going bankrupt or anything, but Saylor was always frustrated at being able to do something that was really game changing. He saw a lot of his peers build large companies, guys like Jeff Bezos, the guys at Google, and all that, launched themselves into the stratosphere, and he just felt frustrated that he kind of had some good ideas, and he discovered Bitcoin and was like, hey, this is the big idea. And in the 5 almost 6 years now since he launched this uh, strategy with his company, he's been able to orange pill so many people, and he's like, he really is following through and bringing Bitcoin to the masses. Do you think he's made any major missteps, Chris, like in his messaging, or do you think that what he's done has been like just like absolutely phenomenal for Bitcoin? Like, a lot of times I find myself ruminating and thinking like, what would the state of Bitcoin be if we didn't have, Saylor moving forward with this? Would the FASB regulations have changed as quickly as they did? Would we have the ETFs as quickly as we did? And it's ultimately unknowable, but I do wonder about, you know, do, like how like do you think Saylor's been able to execute in the way maybe that he's hoped, in the way that you've hoped, Chris?
Yeah, and again, we're talking about the layers of games and the game theoretical aspect of all these things, and there's so many different people with different perspectives, and they're participating in markets in different ways.
Hmm.
So again, like an individual, a pleb with a 10-year outlook, if you've got capital, an individual, a pleb that has, that's focused on growth, I could argue should never look at STRC. Like if somebody asked me that and didn't need cash flow and in that particular swath of, of their portfolio or their however you want to frame it, and they have a 10-year outlook, Bitcoin's going to crush STRC from a fiat standpoint. I think we all believe in that, right? So that's a view. An individual's a viewpoint. Then you have a corporation with a treasury. They're going to manage their treasury different than that individual that's going to take self-custody and run their own node and manage their own keys and do multi-jurisdictional, right, or multi-institution custody or whatever, like, and time lock their sats. And like that's a whole different conversation on the individual pleb side versus the corporation and how they integrate and how they interact with Bitcoin in the market. And whether people like it or not, over the years, different entities integrate with Bitcoin differently. Bitcoin has been wrapped. So IBIT is a wrapper for Bitcoin. I would call it maybe the layer threes. They're wrapping STRC and doing what they're doing. People may not like it either. And it is what it is, but people are going to interact with products if they see a way to provide value to that particular market. And then here's the great thing. It's an open market. It's a free market. You don't have to participate in that other stuff. That's the other thing. Just because a product is out there doesn't mean you should even do research on it, touch it, whatever. And so that's why you have to back to the whole doing your own due diligence and figuring out how you should be interacting with these instruments, and then just make sure it aligns with what you're trying to do, because if not, it does get confusing, and it is confusing. Who thought? I was thinking this earlier. Who thought in 2023 that back then, formerly named MicroStrategy, would have a preferred variable rate stock? Like who would have thought that, right? And years ago, in a different life for me in wealth management, in a brief period, I had to get the Series 65, and I had to study for preferred stocks, and they are boring. It bores you to tears, bores you to tears. Like who runs around and talks to their clients about preferred stocks all day? Not very many, right? So, and the fact that they've done that, and it's only been out a year, and to see the success that it's had, of course, it's going to be bumpy, but people are just going to interact with these products in different ways. I think it's just really important, because you're opening up completely different ways to get exposure to Bitcoin through those different instruments. And when you do that, it literally will take years, as you saw like in the 70s and the 80s with different products. Now, so some of those products in mortgage-backed securities, we saw how it ended. We saw how some people interacted with those products and how it ended in 2000s. We understood that, right? And some took decades, and people blew up, and funds blew up, and things like that. But it is what it is. That's what happens in the fiat world. So if you're sloshing around with these things, especially with leverage, that's a completely different conversation than if you're a pleb and you just buy Bitcoin to hold it and self-custody yourself. And so you have to just make sure you're in the right range. So.
Yeah, if I can add to that real briefly, I mean, the whole promise of Bitcoin is that you can stop being a speculator. Like I know a lot of people would say, oh, Bitcoin itself, you're speculating if you haven't done the homework. But at the end of the day, if you just want to be a great carpenter and stack sats, you don't have to do the headache of trying to keep up with digital credit and Bitcoin treasury companies. Like this group, we love it. It's fun. Like we probably obsess to an unhealthy degree at times over it, but that's because we love it. Like you don't have to do this. You don't have to participate. You can just go back to working on your craft, being a productive member of society, and knowing that you're stacking Bitcoin and that over, a 5, 10, 15-year horizon, you and your family are going to be taken care of. And you don't have to go out on the risk curve and play with these Bitcoin treasury companies. If you're trying to maximize fiat gains, which some people still are, myself included to some degree, then you look at these and you either want to support them because you think it helps encourage the final destination, or because you're looking to maximize fiat gains, or because it's just exciting and interesting. And, at a certain point, when you've been in Bitcoin long enough, Bitcoin can actually get boring. Once you've read every Bitcoin book and read every article and listened to, Saylor's podcast and Mahler's podcast a million times, the protocol hasn't changed that much in 16 years. So this is a way to basically remain on the cutting edge and have newsworthy topics and debates and engagement amongst people in the community. And, it's not for everybody, but it's obviously for this channel, it's right into the veins.
Yeah, maybe I can also add something to Chris's point, right? Because Chris mentioned the mortgage right securities, but in the ethos of Bitcoin, right? First, you have the blockchain, which is transparent. We see all the transactions. We know more or less where the coins of Strategy and Strive and so on are, because they're obviously being flagged through various actors. So that's one thing, but also you see the transparency that these companies have brought, right? Strategy, Strive, and the likes. They all have all these metrics for everybody to see, and they're doing it on a weekly basis and all of that, right? So they're actually coming with a new way of doing things compared to the TradFi world, right? So all of these things I think are really cool, because that's again on the ethos of Bitcoin, and they're building on it, right? So that just to add that, yeah, it's not all a black box, and we don't know what's going on in the shenanigans behind. So I think Saylor and Matt Cole and everyone else are being quite transparent there. So.
Yeah, I think that's a key difference. Like I said, I'm even more convinced after hearing you talk about, the mortgage-backed securities, Chris, that much of this reaction on Twitter, which obviously, yes, is a huge just bubble and super insidery and not real life, right? But it almost just seems like it is a reaction against all these tumultuous times that Bitcoiners have seen, with fraudsters coming in the space and getting wrecked and hurting the entire ecosystem, and kind of facilitating these huge drawdowns in Bitcoin's price. And then, yeah, a lot of us came up um, either in the midst of, or shortly thereafter, the great financial crisis, and seeing everybody get wrecked by, again, kind of opaque instruments that had a lot of hype behind them, that people were kind of trading with asymmetric information, or maybe at times no information on. And I can see how people make parallels, between these types of things. But to Eve's point, yeah, this whole treasury trade is especially from Saylor, from the team at Strive, and a number of other, Bitcoin treasury companies at the top of the leaderboard. It is so transparent what they're doing, right? And that's refreshing. The playbook is on display for everybody to see. So um it's that kind of makes me say, why, why are people attacking it when the playbook is so on display for everybody? To be able to call it a Ponzi is just I think asinine. And yeah, I'm curious your take on that, Chris. Are there just wounds that people have?
Well, yeah, I mean,
That
you speak of
that
yeah. No, I mean, you speak of wins. There's wins in TradFi.
yeah.
I mean, look at 130 years of Wall Street and look at the destruction of capital. And you talk about in the 30s after 1929. Go research what happened in 1929 through about 1940, and how destructive it was after the bubble in 29, and going leading into that. Nobody wants to talk about that though, right? Everyone's like, oh, it's Bitcoin. Bitcoin's the scam. Well, how about the traditional finance is kind of the scam, and there's scams within the system, right? It's not that everything is bad. Is that when people wrap things and get exotic, bad things can happen, and it's happened for a century. So this is there's nothing new under the sun. There's a saying, and there's nothing new under the sun here. So if you don't like the wrapping and you don't like this and that, or these instruments, that's fine. It doesn't mean because something's a wrapper it's gonna blow up tomorrow either. It comes down to the team. Can they manage it? Again, that's the operational risk there. And then on the other side, though, you do kind of see. I mean, this is on the very extremist side, that maybe some people are saying it's risk free. A lot has been very clear. None of these instruments are risk free, and I think that's a very dangerous language to use. Of course, it's not risk free. some of this stuff. Of course, there's operational risks with these instruments that are wrapped. It is what it is. And then you as an investor, you have to decide whether or not you're going to take the risk. That's the spread, right? That's, I'm taking X amount of risk to get this return. Is it worth it? That's all it is. And everybody can have their own opinion either way. So, but this has been going on for such a long time. But and especially now when we have two financial systems, Bitcoin and the fiat system, the arb between the two. Now that's a semantic arb, if you will. People get really upset when I say this, but it's a semantic arb, kind of an implied arbitrage between the two systems. But there's obviously massive opportunity if you see it in that way. But you have to operate and be able to execute at a high level to close that arbitrage, right? Or to, take advantage of the arbitrage during this, we'd say maybe this next 20 years. So.
Yeah, actually on that, I was doing some thinking on this myself the other day. Like, is this an arbitrage, what strategy is doing, or is it a carry trade, or is it a bit of both? And the conclusion I came to is that it's both, that it is a carry trade in the sense that it's you're taking advantage of the gap between the cost of the capital and so the fixed fiat liability and the appreciating Bitcoin asset. That's the carry trade. And that it's an arbitrage as well, because they're financing the carry trade through monetizing their premium to net asset value. That's the arbitrage. So it's like an arbitrage and carry trade combined. That's anyway what I kind of came to as my conclusion of how to use those terms on the trade.
And just throw it out there, too, I know I've mentioned several times, but this concept of inverse LTCM. So LTCM basically was short volatility in the 90s, and they blew up because they were 25-1 levered. And notionally, they had like $120 billion, but their fund only had, 8 billion or whatever it was. And they blew up because they were levered 25-1. They were short volatility. And when things got out of whack, like they were betting on things being calm, converging, staying calm, sideways. And of course, the fiat system doesn't like to do that for very long. Eventually, things happened. Russia defaulted and their fund blew up because they were betting on things converging, and they separated these two instruments that are betting against or betting on and betting against did not converge anymore. They blew up, so the fund blew up. And these were Nobel Prize winners. People know Black-Scholes model, like all the options people, that in that world. Yeah, they made the model, and they blew up. So what hope do individuals potentially have? I'm not put a damper on people and stuff like in the markets. Don't take it that way. You got to be very careful and don't just latch onto a model, especially when you're dealing with the volatility and you think things are always going to stay the same. But they've been doing this. They've been doing this for decades. In my point, with a lot of this stuff, and so you just have to be very cognizant.
Yeah, I'm curious on the point you made about like the arbitrage opportunity for strategy, Chase, and maybe you can clarify it for me just so I've got the right framework here. But like if when strategy sells their common equity, especially when they're trading at a premium, is that type of arbitrage like something that is sustainable long term for the company? Like, because like if there is that dislocation from strategy trading at it, you know, tightly to its net asset value, like obviously it makes sense for the company to immediately arbitrage that and close the gap. Are like algorithmic traders going to eventually, take that, I guess, piece of the arsenal out of the hands of strategy, or will strategy be able to monetize that still if they can find a way to execute in markets quickly? Is that what you were kind of talking about with like the premium arbitrage, basically to sell the common?
Maybe. Let me maybe clarify, and you let me know if I answer the question, hopefully. So if MSTR is at 1.2 MNAV, then theoretically there's a 20% premium to their net asset value. And that 20%, if they issue ATM to raise dollars and go buy Bitcoin, then you can think about it as getting kind of 20% off on a Bitcoin purchase, right? And so that's the arbitrage. The carry is that it's attached to is that if that's how they're raising the capital, but then they're swapping fiat denominated liabilities for Bitcoin denominated assets in the same way that you can think of like the carry trade in Japan, where you might borrow money at 1% interest to swap into some other asset that is paying 3% and you're capturing the difference. Strategy, in my opinion, is doing both. They're capturing a carry trade that they are raising money for at a discount. So they're capturing it kind of like a compounding benefit in a way.
Yeah.
And as far as the sustainability of MNAVs, which I think you kind of brought up there, I do think there's an argument to be made that strategy should be willing to defend the MNAV if it ever falls below one MNAV. So that could be selling Bitcoin to buy back shares. If you know, because then that again becomes an accretive transaction. Now that would scare the shit out of everybody, but if MSTR was trading at a 0.9 MNAV and they sold Bitcoin to buy back their shares, that actually is accretive to Bitcoin per share. It's not going to do great to their credit structure, which counts on kind of the capital structure expanding in terms of total assets on balance sheet, but it would be accretive to Bitcoin per share. So I'm very interested to see what levers they decide to pull if and when it comes to defending the MNAV. And I've heard Dan Hillary make another good point here, which is, shouldn't you be willing to defend the MNAV above a MNAV of 1, because don't you need to place a value on the operating business, on the execution? And what do you place that value at? Is that worth 0.2? Is that worth a 20% premium? And if so, shouldn't you begin defending your MNAV at 1.19? I think it's an interesting question of like, if you believe that the operating business and the products that exist that are catching on to product market fit are worth more than just the net asset value, then you should be willing to defend an MNAV of slightly more than just the net asset value. And I don't think strategy is going to do that, but it will be interesting to see the defense mechanisms that come into play once we get below 1 MNAV, if and when we do.
Yeah. Yeah. No, I think it'll be interesting to monitor. And I do, like I said, I do just wonder if, like, just thinking long term, if the premiums through multiple cycles can persist, because like it does seem like there's a inverse arbitrage relationship from people shorting the stock, right? When the premiums expand. And I wonder, I guess I wonder, is the signal that strategy will defend its MNAV at a discount enough of a signal to keep enough shorts away when it's trading at a premium?
I mean, implicitly, yeah, I agree with that. Right? Like narratives are very powerful. And in 10 years, short-term narratives don't matter. But when we're talking speculation and short-term, like less than a year, a couple years, absolutely those narratives are why do they come out and say it? There's a reason why language is important and what they say is important. They know what they're not saying things just to say it. And remember when he came out last year and said that they would sell Stride to buy back Common. It was a very quick clip, like summer last year or something like that, and it was just like this, and the way he delivered it was just absolutely hilarious too. But to rip the face off the shorts, I think is exactly what he said back then. So I think those were mechanisms. Now you couldn't even feel it, even see it back then, because he said it. You're like, what? Interesting. That's really interesting because all this stuff, that language wasn't even, they didn't have the momentum in those products to even have that mechanism to do. And even right now, let's be honest. I mean, if they wanted to sell STRC today to buy back the equity, can they do it today? They can't, right? They can't do it. It's not seasoned enough. It's not pinned to par enough. And so, yes, STRC is STRC is out there, right? It's a hybrid equity, kind of a mezzanine, but you can't sell it. They're not selling it unless it's at par. So they can't put the tool they can't get action on the tool to then buy back the equity potentially until the instrument starts behaving the way that they want it to behave longer term. So
yeah, sorry, just to chime in there, that's exactly why I said sell the Bitcoin, because if you think about that, that's the scenario that makes me the most nervous in kind of the death spiral, is if we're below 1 MNAV, and in that scenario, you would kind of assume that we're not at $100 par STRC because it's probably some scary bear market, or for some reason, the investing public has lost temporary faith in Strategy's model. So you would imagine that they cannot issue STRC, they cannot tap the ATM because they're below 1 MNAV, and that would just trigger more sell-off of MSTR the following day if that news came out, which would further lower the MNAV. And so what remains, well, you're probably not at the point where you can ATM the other prefs as well. So what remains is selling Bitcoin. And you can imagine a scenario where selling Bitcoin maybe scares off the common equity shareholders even more, even if Saylor's out there simultaneously saying, no, 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 it's accretive to Bitcoin per share, I promise. It's like, bro, I just see you're dropping 20K Bitcoin a month now to try to defend the MNAV. We're moving backwards on the Bitcoin Treasuries.net list. What are we doing? And you can't issue STRC either. So it's that's the scenario that worries me. And so I do want to see more talk about defending the MNAV from the team.
I do have a question though, because obviously they mentioned it during the Q1 earnings call, but now if I went back into the presentation that they had, and if you look at their trades, there is no mention of buying MSTR here. You see all the trades that they said they would do. There is no mention here of buying MSTR shares. So this is something that we've been talking about, but I'm not even sure that they would do it. I don't know what you guys think about that.
There's a sell STRC table specifically. I think it's this. I think there's slides after that, like scenarios. I'm gonna try to pull it up myself too. I think it's after, and it goes through different scenarios.
So that's the slide we were
So
at.
it might be later on in that. I have to.
Okay. Let me see if I can find.
I'm going through it as well. And so here it goes. And I can't. I'm not sharing it, but there's it's the sell STRC to buy MSTR for a $1 billion trade is what it says at the top on the presentation, and then it's got all the scenarios like sell STRC and buy MSTR at 0.5x MNAV, and then it's got 1, 2, 3, 4. It's got 7 scenarios starting at 0.5 MNAV up to 2 MNAV. And then it says the BTC yield associated with that trade, and then it shows like BTC gain, BTC rating, MSTR duration, and MSTR risk. So it's a scenario. And again, they're not locking themselves in. The way I read it is they're not locking themselves in to say this is exactly what we're going to do at this exact time. But it's like, if this scenario happens, here's the option that we have. That if there's the big if is if STRC is humming and hitting par, right? It's behaving like the instrument is designed. Again, now it flexes. It's not going to stay at 100. It's not going to stay at par every single day. You know, there's going to be some flexing with it and things like that. But over time, the concept is it's going to be more of a magnet to par. And then when it's hitting par, that gives them the flexibility to then they could potentially sell STRC to buy MSTR.
Yeah, theoretically, they could sell down the USD reserve if it had been rebuilt in time to also buy back MSTR in the scenario where STRC is not at par and not able to be issued. But, you know, and maybe that's part of the inoculation of selling the Bitcoin and selling down the USD reserve is to show that, you know, we might have to be able to do this to defend MNAVs in the future.
Sort of selling MSTR indirectly, you mean, or selling buying the MSTR common through the USD reserve.
Yeah, and they mentioned on the last earnings issuing STRC to buy back the common equity if it was trading below or no premium. That was part of the conversation of like, I would love nothing more than to send MNAVs to 3, 4, 5, 6 and destroy the naysayers. And so that was that comment. But you could imagine that if STRC isn't at par, they could tap the USD reserve because now they've shown that they are willing to touch that and they are willing to sell Bitcoin. And in combination, those two things could be used to buy back the common equity in an accretive way. And if they tap the USD reserve, they've already shown now that they can sell the Bitcoin to pay down the dividend obligation. So even if they dried up the USD reserve, there's still an argument to be made. You know, STRC existed and had dividend obligations before the USD reserve existed. So it is possible to maintain the STRC dividend obligations even with a zero USD reserve. So I could imagine them using the USD reserve as kind of the first option to defend MNAV, and then planning to rebuild it later, on a week-to-week basis like we're seeing them do now.
All right.
Cool.
Yeah, interesting. I'm just wondering why it's not on this specific slide though, and it's only coming later in the presentation. That's what got my attention actually. So yeah, I don't know, Tyler, if you also have thoughts on that.
Yeah, I mean, not much more to add. Yeah, I think it's interesting, and I think we're gonna find a lot with how strategy operates over this, the back half of this year, with regard to how they use these instruments to either add to the USD stack to defend the MNAV, and a lot of it's just going to be tied to Bitcoin's price and in sentiment. So yeah, like I'm sure they're anxious to get out of this bear market and price on Bitcoin because everything gets a lot easier in that situation. But uh, yeah, I mean, yeah, I don't know. How are you thinking about that, you guys? Like I guess if price action stays where it's at, and we don't see STRC rebound, things are going to get really loud from investors. The bears are gonna gonna rise up again. Sentiment on X is gonna be in the toilet. Yeah, what happens if stretch takes a while to hit par? We've kind of the move to semi-monthly dividends on this instrument has kind of in theory, reduce the event-like nature that we've had over the past several months, where you're getting twice monthly events. And if STRC can't reclaim par around those dates for the next coming months, how do you think they move forward? Is it just stay the course and stay on target, or what are your thoughts?
I mean, obviously they have the ability to raise the dividend.
Yeah.
So kind of like obviously the self-healing mechanism with it. But day to day though, and again, if people are speculating, long, short speculators, that is an entirely different game. I mean, these narratives change so fast from day to day and week to week and what's going on. And so you've got another 2 weeks. This next 2 weeks is probably the most interesting time for STRC in a very long time, in my opinion, as to how it behaves between now and the start of the semi-monthlies, and to go from there. And it's some of this is like, I don't know how to explain this, but like with SATA and I've always thought, what if STRC was the only thing available and there was no SATA? How would STRC in the very short term behave the last couple months? And I'm not trying to pin them against each other, but you kind of have to be a realist at the same time. Like in the short term, there are two instruments, and there's capital looking at both instruments. Let's just be honest here, right? There's capital looking at both instruments. Now, is it just retail? Is it small fishes? I have no idea, and neither does anybody else. We don't know. We don't know everybody's rotations and all that stuff and what people are actually thinking real time with these things. But kind of in a very short term, they're two instruments that's kind of pitching similar things. And so there are potential capital allocators that are making decisions in the very short term. Now, in years down the road, I don't think that's going to affect the infrastructure of like the product and how it integrates with like the environment that they're in. But in the very short term, you have arbitrageurs, you have very intricate games that people are probably playing on these things with potentially some pretty deep capital. And so you're just going to see, because it went from monthly to daily. I mean, they didn't even go semi-monthly with SATA. It went to daily, and so they like skipped their rung. Like if you're climbing up a ladder, they like skip their rung. And so, I mean, there's no data to support it, but I mean, how can you not say there's probably capital rotation to the SATA after they were announcing dailies? If it was a quasi narrative of like it was going to be a magnet to par more so than STRC because STRC was semi-monthly, I mean, someone could spin that narrative, or even if you know what I'm saying. So in the very, very short term, there's all this stuff going on about capital going back and forth because initially there was also this like there's like a carry trade with STRC and then you flip to SATA for the next because they were diametrically opposed on the exit dates and things like that. So those little dynamics they mattered very short term, like over the course of years for the ecosystem. That's a different conversation.
Yeah, yeah. It does seem like a done deal that the dividend's going to get raised at the end of this month. I think Strategy announces that on the first of each month or whatnot. Yeah, like as that gap between the yield on STRC and SATA, potentially narrows, I think things get really interesting there. Because like I think you have to say, even though Strive has no debt on their balance sheet, they're like just clearly more of a credit risk than Strategy, who's got 850,000 Bitcoin, right? Am I off base there?
I totally agree. I think they're absolutely competitive products, and that the whole point is that SATA will always have to provide a higher yield because, like it or not, the simplicity of the balance sheet, the no debt, like it or not, they are a riskier credit instrument because they just simply do not have as big of a balance sheet of Bitcoin. And nobody will ever catch Strategy, in my opinion, on that front. So Strategy will always be the premier issuer of digital credit, and so we'll probably always have the lowest digital credit instrument. But yeah, I do think that um, these products are highly competitive, and that Saylor and Matt Cole are acting very buddy-buddy these days, and it makes sense because they're kind of together helping form this new industry. But it comes to a certain point where me as a MSTR common equity shareholder is saying, hey, no, I want my company's digital credit to win. Like I want us to be offering the best digital credit. And if not, I might have to consider being a shareholder of ASST. So I think MSTR shareholders are looking at this daily dividend and they're saying between the higher yield, the no debt, the equally good operating team, and the daily dividend component and frequency, we have a real competitor, and we need to catch up if we want to reestablish our dominant position as digital credit.
Yeah, yeah, that makes a lot of sense, and yeah, it will be interesting to see if the competition in these products escalates. They're trading oodles and oodles of volume, right? Like I think the 30-day volume, just doing the quick math here, 300-400 million dollars of volume on stretch per day, and then it's almost an order what less than 100 million for Strive. It's got or for SATA. Um, is there enough? Are there enough people, do you think, trading between stretch and SATA that it is making a meaningful difference in this price dislocation between the two?
I don't know. I'm not up to date on the numbers there. All I know is that the stronger that Strive's perceived digital credit instrument looks compared to Strategy's STRC, the more attractive their common equity becomes compared to Strategy's MSTR. And I've felt this in my own right. Like at Savannah, we offer products where people have their choice between IBIT, MSTR, ASST. And I'm surprised how many folks are trying to optimize for ASST inside of these products. And it's because they are more confident in Strive's digital credit right now. And, in many ways, when people first bought Strategy, they felt like they were buying Bitcoin at a lower market cap. Like when I first bought Strategy, that's kind of how I looked at it. Is like, okay, I'm getting, Bitcoin exposure at a lower market cap, so higher potential for multiples. And now you have Strategy that is so big, relative to the Bitcoin ecosystem anyway, that now Strive looks like a strategy at a lower market cap. And so I do think that Strive is starting to compete not only with the digital credit, but also the common equity. And people that want to buy spot Bitcoin and self-custody, they're going to do that. They're not looking at MSTR or Bitcoin Treasury companies. But people that are looking at MSTR and STRC do have to make a decision between that and ASST and SATA. And I think that it's becoming a much more difficult decision than it has been just 4 or 5 months ago.
Yeah. definitely. I do wonder if, some of these, secondary Bitcoin treasury companies behind strategy do become kind of that dominant narrative. Maybe it is just Strive. But, Bitcoin's always had through the cycles like, oh, the last cycle was like, we've got companies custodying Bitcoin on their balance sheet. We've got a company with strategy, um, you know, who's buying a lot of Bitcoin out there. And little did we know in 2024 and 2025, sale in 26, Saylor would buy as much Bitcoin as he did. Um, is this the next dominant narrative for Bitcoin at large? Are these, secondary companies like Strive? Is digital credit? Are these preferred equities the narrative that is just going to drive more, interest and capital rotating into Bitcoin? On last week's episode, we talked about SpaceX and AI kind of sucking a lot of the capital out of the Bitcoin market, and since SpaceX, went public last week in a couple days of trading, it's been a straight line up. They surpassed Amazon's market cap, I think, today. They're the number 5 company, and just like, yeah, gobs of capital are rotating into that company, into AI. How does it find its way back to Bitcoin? Is it just like or is it a slow grind up from here? People discovering, STRC and SATA, and buying, maybe the common equity of a company like Strive that is able to execute on this strategy.
Well, when you hear Saylor talk about STRC being the iPhone moment, just to break down what he's really saying there is he's saying, we have created a usability factor that meets consumers where they're at. And the iPhone moment being that the internet and all that the internet had to offer was not as accessible to the mainstream until there was a product that made it that easy to engage with. And so when you look at the difficulty of becoming a true Bitcoiner and things like self-custody, et cetera, you have to ask yourself, what would the iPhone moment look like? And in my opinion, it's one of 3 things. It's either that there's going to be some innovation in custody that makes self-custody of Bitcoin so easy that a caveman could do it, or you have an innovation in the wrapper that it makes it so easy that anybody with a brokerage account can buy it, and that's the ETF, that's BlackRock IBIT, and you could argue that that's the iPhone moment. Or you have to look at something that has 0 duration risk, 0 volatility, and that's digital credit. And if you ask me, which of those 3 meets the consumer further towards where they are at today and where you can meet them to kind of remove some of the frictions that Bitcoin offers as a savings technology, to me, digital credit does represent more of the usability factor that solves for more than either of those other ones. And it's hard for me to imagine what else creates the usability of Bitcoin in such a new foundational way.
Yeah. What do you think, Yves?
Yeah, I mean, Chase had his 2 coffees, so he's obviously full throttle. Yeah, not much to add, to be honest. I mean, this is something that we've been discussing in the space for a while, right? I mean, the adoption of Bitcoin in self-custody goes as far, at least for now, until UI and UX improves. I think we're reaching a bit of a plateau. I think we will get a new wave of adoption once these UI UXs not issues, but kind of constraints kind of improve. And in the meantime, you have the Bitcoin treasuries that are stepping up and taking this next, the adoption to the next step, right? So through the equities, strategies, Strive, and so on, but also on digital credit for the people that want those additional yields, as Chase already points out. So definitely it's going to be the narrative until we have, I think, some UI UX that improves on actually self-custody Bitcoin and just how we manage Bitcoin in general.
Yeah, no, I think you guys are right. And like, yeah, it's well said by both of you. I think a dark horse candidate for like this next narrative may be like an operational company like 21 or somebody else we don't see coming, who can, monetize Bitcoin in other ways, and attract some more capital to their company, as a company that treasuries Bitcoin, you know, and a lot of that company, it just goes out to building the Bitcoin ecosystem and adding Bitcoin to the balance sheet through operationally. And maybe that means, maybe it's even strategy themselves focusing on something else, although I think they're probably hesitant to put their stack to work in other ways other than digital credit, at least for the next few years. But I think, you know, ultimately that is something treasury companies are going to try. If they're successful, if they hang around, they're able to, you know, add more value to their shareholders. They're able to acquire a larger stack of Bitcoin. Of course, it makes sense for some of those companies to monetize it to an operational business that's doing something else. So lots of cool things to monitor there. We'll be monitoring digital credit here for you guys every week. Really excited to see how the market digests these daily dividends. Yeah, I just like I'm gonna have the popcorn out every day, watching the volumes on SATA, seeing how much Bitcoin they're able to add, and you know, if we get interesting trades that happen around, you know, the record date for STRC, and if there's a rotation from SATA to STRC, and how those dynamics work, and if you know, if strategy is going to follow suit and offer more frequent dividends by you know, changing up how their company's structured. So Chase, Yves, thanks so much guys for joining us again. Chris had to jet early, but thanks for all you guys online tuning in on X and YouTube to the Bitcoin Treasuries Takeover. We'll be here at noon Eastern live every Tuesday with you. Take care.